Trading sounds like a great profession, right? It doesn't ask for any educational background. You can make some quick money by just being online for a few hours a day. And it doesn't need any human interaction. So the pandemic can go to hell because you can't lose your job. But that's not the whole story. Nikhil Kamath has been doing it for more than 17 years now, which is why this video would be incomplete without Nikhil sharing with us his experiences and learnings of becoming a trader. So ladies and gentlemen, it doesn't matter if you want to be a full-time trader or a part-time trader and don't know anything about trading. Today, by the end of this video, you'll know exactly where to start, because in today's video, we're going to see 6 simple steps you can take as a beginner to become a day trader. And towards the end, I'll give you a bonus tip so that, like most traders, you don't lose all of your money in the stock market on the first day. And as always, if you like the effort we put in making our videos, then make sure you hit that like button. Let's begin. First, let's start by understanding what is trading. In the stock market, there are 2 major types of participants: investors and traders. Long-term investors like myself identify good companies and hold their stocks for years, hoping that their value will increase over time. But day traders buy and sell securities and stocks and sell them on the same day with the goal of making a profit. You might have heard that statistically more than 95% of traders lose money because trading is risky. So if you're a beginner, here are the 6 things you can do so that you don't commit the same mistakes as those 95%. Step number 6, follow the news. What's interesting is that all types of news, local, national and international, have the power to affect the stock market prices. News like vaccine production, company merger, rupee versus dollar rate, union budget, elections, even rain predictions. So as a beginner, your job is to first follow news regularly and observe how it is impacting the stock market prices, which companies are getting most affected and how. Now the question arises, what kind of news resources to follow?
So don't go by news sites where they're recommending you buy or sell a certain equity, but rather pick news sources which are a little bit more objective about data. There's a site called screener.in, which is decent. FinShots are great. Like FinShots put financial articles in a manner that simplifies, but I would say you can find everything for free out there. There is no reason for you to, go pay $2,000-3,000 a month to get a Bloomberg terminal or anything like that. If you were to look and research, you will find free sources which are very good.
The most obvious free source is Google News. You can follow the business news in particular. For company-specific news, check out screener.in or ticker.finology.in. And FinShots newsletter for getting your simplified daily dose of the market. As a beginner, you can start with these, and the more you read, the more personalized favorite resources you will find. Step number 5, read some books. There are high chances that you're here because some movie or a TV series has gotten you interested in the stock market. But if all that trading jargon has gotten you confused, then here are some books that can help.
Try Jack Schwager's Market Wizards. He has a couple of them. There's a reminiscence of a stock operator, which is decent. Traders talk about what they did, so they're quite interesting. They're like storybooks. If you want to do something more fundamental in nature, you can read the Graham's Intelligent Investor. If you want to do something technical in nature, I think candlesticks are a good place to start. So maybe Steve Neeson's books on candlesticks.
I've left the Amazon link of all of these books that Nikhil has mentioned and more in the description. These books will help you understand some basics, a little bit about fundamental analysis, a little bit about technical, which in turn you can use to build your own trading strategies. Which brings us to step number 4. Learn risk management. You must have heard a lot of people referring to trading as gambling. But the difference between a trader and a gambler is risk management. To give you an example, some traders might put all of their trading capital, say 20,000 rupees, on one stock, XYZ, hoping that it will go up by 5 points. But they don't prepare for what will happen if it goes down. But risk management allows you to protect yourself when things don't go according to your plan. Let's ask Nikhil how he manages his risk so that he doesn't lose as much even on those not so good days.
Very simple rules that I think everybody needs to adhere to. The more you leverage, the easier and the more likelier the odds of you losing the money are. So try to shy away from leverage. Having a stop loss is a good rule. If you're buying something at 100, you might be right 5 times, wrong 5 times. When you're wrong, you need a stop loss. So if the 100 becomes 90, you kind of exit it. Another great rule out there is to diversify. Never put all your eggs in one basket. If you have 100 rupees to allocate, buy 10 different things. Just stick to large cap, diversify as much as possible is probably the best risk management one can do.
So, as a beginner, here are some things you can learn to control your risk as a trader. Learn some basic terms and concepts like risk per trade, risk to reward ratio, position sizing, risk capital. As Nikhil mentioned, always have stop loss for all of your trades. To understand what is stop loss and how to place it while you're trading in the stock market, watch this video, which shows in a simplified manner how you can enter a trade along with a stop loss. I've left the link of this video in the description. Open a book and journal all of your trades. This will help you discover your trading style, what kind of companies you like trading in, what trading strategy works best for you, and so on.
Yeah, I think journaling your trades is a great idea. It is. I think the entire intention with trading has to be able to learn from what you did wrong, and journaling plays a huge part in that.
As a beginner, you need to understand that trading is not about the money you make, it's about the money you protect. And the more money of yours you protect, the longer you can stay in the game. Step number 3, learn fundamental analysis. Before I tell you why, let's first hear from Nikhil how his trading strategies have evolved over time.
When I started, fundamental analysis was what ruled my trading mechanism for the first few years. This was followed by technical analysis. Beyond that, I got into a little bit more quantitative stuff, correlation and mean regression, when things kind of become volatile very quickly, how you benefit from that. That was followed by sentimental analysis, kind of trying to gauge sentiment. At the end of the day, the price of a company either goes up or goes down, not based on all of the other metrics we just discussed, but based on people and sentiment. So I went through these 4 phases largely, each lasting a couple of years. Now I feel like a combination of the 4 works for me.
So, yes, technical analysis is at the core of trading. But if you're new, it's good to start by understanding how to evaluate the true worth of a company. And what helps you do that? Ding ding ding, fundamental analysis. So, as a beginner, here's what you can do. Pick a large cap company, especially from the sector you're familiar with. Let's suppose you're from IT. Then maybe pick TCS or Infosys and add them to your watch list. On one hand, perform fundamental analysis of this company, like read their balance sheets, read about their management, understand its true worth. And on the other hand, observe how current news is fluctuating its market value. Yup, combine it with step number 6. Now, how to do this? Again, for that, watch this video, which will help you understand how to add companies to your watch list. People might say that fundamental analysis is not important for trading, but this will help you understand the personality of those stocks better, which in turn will help you make better trading decisions. In fact, I want you to comment below and commit to making a start by telling me which company you're going to start with first. For example, I'm going to start analyzing Infosys first, or TCS first, or Reliance first. Step number 2, avoid trader bad habits. Even before you enter the market, remember to avoid these common trader bad habits that make them lose too much too soon. Some of those mistakes are trading based on tips or alerts from random chat rooms instead of doing their own research. Not following a trading plan and instead making random trades when the market opens that are driven by emotions like fear, greed, or worse, boredom. Failing to plan for failure, aka not doing any risk management. And this is a big one, trading with their living expenses instead of their disposable income. Let's ask Nikhil what bad habits he has observed among traders.
I think all of what you said is a bad habit, but none more so than leveraging. I think that is the biggest killer in the stock market. Don't try and mimic what someone else is doing or recommending. Generally, if somebody is recommending you buy something, if they're trading system was working, they would be out there trading and not recommending. You could flip a coin and pick large cap equity and you would do reasonably okay. The rules behind it, I think what you do after you buy become significantly more important. Don't let emotions sway you into thinking you made the right decision, wrong decision, or any of those things. But buy something, put a stop loss, retain the ability to delay gratification, follow your rules, and I think you'll do okay trading.
Step number 1, learn how to use a trading platform. Obviously, the first step to trade is to open a trading account and learn how to use the platform. And the reason why I showed you this on the Zerodha platform today is not because I interviewed Nikhil Kamath, but because I use Zerodha for investing both in stocks and mutual funds, especially because it is India's #1 discount broker in terms of active clients. And this one video will take you through the entire process of how to open an account, how to execute your first trade, and how to make your first investment using Zerodha. I am overwhelmed with all the love this video has received in spite of being so technical. So in case you haven't watched it already, then I've left its link in the description. Do check it out. Now before I give you the bonus tip, if you've liked today's video, then tell it to the YouTube algorithm by hitting that like button so that YouTube recommends you more of my videos in future too. And don't forget to subscribe to this channel and hit that bell icon because we make career and finance videos that are crisp and to the point. I promise I don't make unnecessary videos. I only make them after proper research and analysis. Sitting on a beach with your laptop, working for just 2 hours every day, driving Lamborghinis and sipping pina coladas on a beach. Trading is nothing like that. And that's unfortunately why most people lose money. So today's bonus tip is this. With trading, have realistic expectations. Nikhil says that if you expect you will make 15%, then you will be more likely to achieve that rather than thinking you will make 40 to 50%, which will make you take unnecessary risks that will make you lose money. Don't get me wrong, I'm not discouraging you from trading. I just want to set your expectations right. So read books, apply what you've read, build your own strategies, invest little amounts first, and find out if trading sparks joy. Maybe you will enjoy being a trader. Maybe you will discover that trading is not for you. And instead, you want to become a long-term investor in the stock market. Either way, watch these 2 videos next to learn what is stock market and how to invest in it. And at the end of these 2 videos, I assure you, you will have a better clarity about which direction you would like to take. You can access these 2 videos by clicking right here. I thank Nikhil for taking out the time to interview with us, even when he was feeling a little under weather.
Thank you, Team Urban Fight. This has been great. It has been a lot of fun and hope to chat with you guys in the future as well.
And thank you for watching this video. I'm Taskeen, this is The Urban Fight, and I'll see you in the next video.